All right, so 3 ways to lower your payments on renewal. That's what we're talking today on Canadian Mortgage Weekly Live for Thursday, October 6th at 11:30 a.m., Canada's only weekly video mortgage news podcast. Thanks for joining me today. And, there's a lot of renewals coming out there right now with payments that are hundreds and hundreds of dollars higher than what people have been paying prior to when they got the renewal notice. And that's becoming an issue for a lot of our borrowers. So Canadian homeowners are going to be looking for solutions for this as they get the renewal notices and realize that these payments are going to be quite a lot higher. So let's take a look at some of the 3 things people can do to lower their mortgage payments on renewal. And one of those things is actually to refinance. And if you refinance at your renewal date, then you're not going to pay a penalty. But why would you want to refinance at your renewal time just to get a lower mortgage payment? Well, the strategy here would be that if you're refinancing at that time, you're going to take your mortgage payment down up to quite a few $100s if you choose to take a amortization period that could be, say, 25 years, 30 years. And we also have 40-year amortization periods available. Refinancing might not be for everybody, but that is one way that people right now are lowering their mortgage payments to give them cash flow relief from their renewals coming due right now. Number 2, another reason why people would want to lower their payments and what they can do about it is actually if you have some savings right now and your renewal date is coming up, you can actually do a prepayment on your mortgage and go right into your lender's online portal or the branch that you bank at and do a prepayment on or before your renewal date. And what's going to happen is at your renewal time, your payments will go down because you'll have the ability to lower the payments because your mortgage balance has gone down, and the lender will offer a lower monthly payment just because your mortgage balance is that much lower. So that's number 2. Number 3 is actually doing an interest-only mortgage. I know that's probably not something that a lot of people want to do, but the strategy here is right now you're paying principal and interest, and who knows how long rates will be this high for. They may only be this high for, say, 6 to 12 months. I know looking back at the past recessions and past times Canada did raise the interest rates, looking at the 2008, 2009, and then in the early 90s and then the early 80s, we had a lot of interest rate hikes, but they only lasted about 12 to 18 months. So in those times, it was a short term. And what people did is they actually looked at and what you can do today is going into an interest-only mortgage, which would eliminate any principal payment. However, you would have a much lower payment because you're not paying any principal off. So it's just the interest to carry you through this time when the cash flow is needed. So those are the 3 things people can do. The one going interest only would be very beneficial for property investors because as a property investor, you will have it would be a tax write-off to pay that interest charge. So whatever you're paying on your mortgage, if it is interest only, would be a full tax write-off. So if you don't have savings to do a prepayment on your mortgage, another thing you can do to take advantage of point 2 and 3 would be to do a prepayment from your home equity line of credit onto your mortgage. And what that will enable you to do is to bring down the mortgage balance, making the mortgage payment lower, and then it will increase your home equity line of credit. However, that portion will be interest only. So it's a little bit of you're still carrying the same amount of debt. However, the overall payment would be less. So why am I talking about this today? Well, a lot of clients, as I mentioned, have renewals that are coming in that are hundreds and hundreds of dollars higher. We're seeing people paying mortgages that are $400, $500 higher now on a renewal. I know personally I have a renewal coming up, and with that, I see all the options available to me, the 2-year, the 3-year, the 4-year, the 5-year, and the variable. They're all higher than what I'm paying now, at least by $400 or $500. So I need to make some choices as to what I will be doing with my own personal mortgage. So that's what I want to share with you is that if I have my own mortgage coming up and I'm seeing that these renewals are coming $300, $400, $500 higher, then a lot of my other clients are having the same issue. And that's what we want to do, is to give you an idea of what you can do to lower those payments. So the reason why this is useful is because it's going to enable you to get a better cash flow position after your renewal versus just taking the renewal that is being offered. Say your renewal offered right now is at $2,000 a month. Even if you could lower that down by $200, $300, that will give you a better cash flow position right now while the rates are high. And as I mentioned, rates in the past, when rates have been hiked in the past, 2008, 2009, and then in the early 90s and then early 80s, that only lasted for 12 to 18 months. It wasn't a long-term thing. And because of that, we are in a high rate environment right now. And we've been in this high rate environment for about 6 months. So a lot of experts out there are predicting that the high rate environment will only last for about 6 to 12 more months. So it's a temporary solution as to what we need to do to get further on this and getting this all done. So another thing is how people are responding. So to do this with the higher rates and to do a mortgage renewal that is lower on your renewal would be to, if you want to take advantage of point number one, which is refinancing at your renewal time. Say you have a mortgage amortization left of 20 years left on your mortgage, you could reduce your payments by hundreds of dollars just by switching to a 30-year mortgage or 40-year mortgage, which 40-year mortgages are available now. There are some lenders coming out with that, and that will lower your payments and give you a much better cash flow position. Now, to do that, it does take into account to get back on track with a good amortization. You will need to get back to where you're at. You can take advantage of prepayment privileges to bring you back to where you were before on that amortization while you're taking advantage of the cash flow now. So what I mean by that is refinancing now to a 30 or 40-year mortgage. And then as your cash flow position improves, say you start earning more money or receive some money as a lump sum, you can put that back on the mortgage and that will automatically lower your amortization with your current lender. So what are the financial impacts of doing points 1, 2, and 3? Well, that will essentially lower your mortgage payments at renewal, giving you a better cash flow position going forward. And if you know anyone that is in this position where they have a renewal coming up and they have the renewal being hundreds and hundreds of dollars higher than what they're paying now, share this episode with your friends and family so they can benefit from one of these three strategies that I'm talking about here today. And what's going to happen in the future? Well, right now on October 26th, the Bank of Canada is meeting to discuss rates again. There's a good chance rates will go up. And with that, we'll be in this high rate environment that could last for another 6 to 12 months based on what experts are saying. As I mentioned in the past, they've only lasted for 12 to 18 months total. So we'll see how that goes. And what should people be doing? They should really be looking at their renewals strategically right now because rates are so much higher and renewals are coming in so much higher. It's really important to be able to look at the options available and make a strategic decision as to what you should do on your mortgage. And with that, renewals give you an opportunity to make a decision and to make a change without any penalties. And that's really important. So if you have any more questions about that, please give me a call. We're going to be able to go over your mortgage situation and your goals and what you have available to you to be able to do all that and get you all sorted out that way. But please don't make any decisions until you talk to a mortgage professional such as myself to be able to do that. So let's take a look today at today's news out there. There's a lot of news out there. One of them being we're celebrating episode 101. We had our last week celebration celebrating episode 100. Again, thanks for joining me today. Thursdays at 11:30, Canada's only video mortgage weekly news podcast. And going into the first item here, we have the 5-year bond yield. And what the 5-year bond yield has been doing is right now it's at 3.43% as of yesterday. It's been staying above 3% since about the summertime there. And compared to last week, it's gone up about 10 basis points. So with that spike that we saw the bond yield do in the summer, which was June, July, we did see 5-year interest rates peak at that time. Since then, they dropped about 50 basis points and have been hovering at that amount. So you do see a little bit of a increase in the bond yield just recently. We have seen some lenders hiking their 5-year fixed rates back up just slightly. And what's really notable is that 2- and 3-year rates that are fixed have been going up quite considerably. And this is because right now we have a lot of folks looking at those 2 to 3-year terms, looking at just locking in for the short term and seeing what happens in 2 or 3 years. And one of the main reasons that people don't like to lock in for 5 years is because there's a big penalty associated with a 5-year fixed mortgage if you ever go to cancel that mortgage later on down the road. So if you get pre-approved now, you can still take advantage of the little bit of a lower rate that has been offered since the summer on 5-year fixed mortgages before they start creeping back up. So that is some news here on the 5-year bond yield. Let's take a look at the inflation rate today. The inflation right now for Canada is sitting at 7%. Those are numbers as of August of 2022. And the peak of inflation was 8.1% in June. Because of that, prices are still going up. Inflation hasn't stopped. Food prices keep going up. The rate in which they've been going up has slowed down just slightly. I'm really encouraged to see that the inflation has dropped now for 2 months in a row. I'm really hoping that we have 3 months of dropped inflation with the numbers coming out for September, probably in about 2 or 3 more weeks. So if the trending down does continue with inflation, we should see the Bank of Canada either slow their rate increases or just put them on a temporary pause if it drops to significantly lower levels. So let's take a look at the United States inflation rates. I know that a lot of Canadian inflation rates do follow the United States inflation rates, and that is here. So we're seeing that the inflation for the United States is at 8.3%. It's dropped 2 months in a row as well from a high point peak of 9.1%. So that's also good news as well. We'll see if this trend continues going into next month for September's numbers when they come out in just a few more weeks' time. All right. So looking at our next slide here, which is the CDOR rate. And the CDOR rate really helps me give a good recommendation as to what people should be doing on their variable rate mortgages, anyone that's taking out a new mortgage right now. And this is essentially, we look at the variance of the CDOR rate to the prime rate. Right now, prime rate in Canada is 5.45%. The Bank of Canada rate is 3.25%. And right now, the variance to prime is 1.21%. Because that variance is under 2%, we can see that right now fixed rates are a slightly better, or not a better option, but just a option that you should really consider as a mortgage holder and Canadian homeowner in Canada. It all depends also on what your goals are with your mortgage, because there are certain things that I would still recommend variable rates for. And that is something that really we should talk about with your specific mortgage situation. I know I have a mortgage renewal coming up very shortly here in just a little while here on one of my properties, and I'm looking at doing a variable rate because I do not believe that the rising rate environment will last for more than 12 to 18 months. And that's based on historical data, looking at 2008, 2009, also the early 90s and the early 80s, when rates did go up previously in Canada, but did not stay high for very long, not for the long term at all. So again, good time to consider fixed rates if you are a variable rate mortgage holder. But again, it also depends on what your plans are for the next few years. And when you do take a fixed rate, make sure you tie that term with what your plans are and all that. So looking at the next Bank of Canada announcement, we're looking at October 26, 2022. That is coming up in 20 days. Here on Canadian Mortgage Weekly, I'll be doing a special episode talking about the upcoming interest rate announcement. We'll start that show at 9:45 a.m. with the live announcement happening at 10 a.m. with some reactions happening shortly after. So join me for that live pre-rate show and live rate announcement at that time. Right now, the current overnight rate's at 3.25%. And the last announcement, we did see an increase of 0.75%, which is 75 basis points. So from a low of 25 basis points, which was 0.25% during the pandemic, we've gone up a huge amount to 3.25%. So that's where we're sitting now. And again, the next announcement is October 26th. So inflation numbers will be really considered here when the Bank of Canada is deciding what to do with interest rates. All right. Average national house price. So this is a slide that doesn't really represent the average house price in your area. If you're looking for an average house price in your area specifically, please contact me. I can get you in touch with your local real estate agent. I'm connected with local real estate agents in many of the major cities in Ontario, and we can get you local data. However, on a national scale, we did see prices continue to drop since February until last month. And then last month, we did have a 1.5% increase in the average national house price, which is huge news. I'm really encouraged to see that. Maybe the trend is reversing. I know that payments for mortgages in February of 2021 for buying a home in 2021 are now matched to the same price of home, same type of home based on the mortgage rates, based on the average house price now at current. So that means what I'm trying to say is that as prices have come down, it's brought the payments back into line. So you're actually paying now the same mortgage payment for an average priced home now versus what you would purchase in February, same mortgage payment. And that's because the interest rates have gone up to a point where the prices did need to come down, and now the payments match what you would have paid for a higher priced home in February. And the reason is because the interest rates are higher. So with that, the national house price right now is sitting at $637,673. Again, they rose for the first time since February of 2022 by 1.5%. And prices right now are close to where they were just in the beginning of the pandemic, which is really interesting to see. Annual household income required to purchase the average national home, it would be $133,000, and that's based on a minimum down payment. And for a minimum down payment, you would require a down payment of $41,448.75 on the average priced home, and that's including closing costs and land transfer tax, legal fees. All right, so again, what's the future have in store for the national house price? I'm not sure. But right now we are trending upwards since last month. And again, thanks for joining me on episode 101. It's a pretty amazing thing to be doing this show now for 101 episodes. I would love to hear what your comments are, what you would like to see me talk about here on Canadian Mortgage Weekly, Canada's only video mortgage weekly news podcast here in Canada for the Canadian homeowner. We talk a lot about the mortgage statistics, the inflation numbers, the rates, but we also give a little bit of an insight as to what people can do each week with their mortgages. This week specifically, we looked at 3 ways to lower your payments on renewal. And just to go over those items again, number 1 is you can refinance into a longer amortization period, which will lower your payments going forward. And then to shorten your amortization period, you could always do a prepayment on your mortgage to lower that amortization back down when you have better cash available. Number 2 would be to, in no particular order, would be to switch to an interest-only mortgage or to essentially move your mortgage balance over to your home equity line of credit. That is not recommended as a long-term strategy. However, on a short-term strategy, you will notice that because on a line of credit, you're paying interest only versus a mortgage where you're paying mortgage plus principal, your payments will go down. So technically, that does work as well. And number 3 would be to make a prepayment on your mortgage at renewal. So essentially doing a prepayment on your mortgage of say 10, 20, 30,000 will lower that mortgage balance And if you keep the same mortgage schedule, you will have a lower payment then to move forward on your mortgage. So those are the three ways people can take advantage of lowering their mortgage payments on renewal. There are some other options that I didn't go in here that are a little bit more complicated. So if you're looking to speak to someone about your renewal and getting a lower mortgage payment, please give me a call. You can message me on Facebook, LinkedIn, YouTube, leave a comment below, private message me, text me, call me, or email me. There's a lot of different ways we can set up appointment. We do appointments over Zoom, WhatsApp, Google Meet, Skype, or even in person if you're in my local area. We broadcast from Orillia, Ontario, and we help clients all over Ontario. So thanks again for watching, everyone. We'll see you next week on Thursday, October 13th at 11:30 a.m. And thanks for joining us again on Canadian Mortgage Weekly Live, and we'll see you next time.